Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Now, taking a look at what we have on the screen, we've got S&P 500 failing to bounce back from Friday's steep sell-off. The broad market index down 0.5% to 5,983. The Nasdaq Composite was the biggest loser, dropping 1.2%. And the Dow Jones Industrial Average squeezed out a small gain of 0.1% or 33 points to 43,461. And we had some of the major technology shares or companies coming under pressure, which weighed on the Nasdaq. So let's take a look with what we have on the screen. Palantir down 10.5%. Microsoft shedding 1%, and chip giant Nvidia pulling back 3%. For more insights, we are joined by Howard Silverblatt. He is the Senior Index Analyst for Product Management at S&P Dow Jones Indices. Howard, good morning. Thanks for joining us on the show today. How are you doing?
I'm doing well after today's slight decline in the market, as you said. It was a battle. We had opened up higher, a couple of buying programs, but in the end, there's still a lot of concern about consumers and spending in the U.S. And near the end of the market, we just got a lot of selling came in, pushed us into the red by half a point. Tomorrow's consumer sentiment numbers, which comes out about 10 o'clock our time in New York, could be a key indicator, the consumer confidence number, to see how we go. But the market's nervous. So we're down another half point, still up year to date. The Magnificent Sev obviously has not been working the way they were before. They did great from the election until December, but since then they kind of pulled back and are actually taking away from the index now at this point. But it was a battle of a day, even though we ended up on the bottom side of it.
It does look like some profit-taking to some extent on some of these names. And talking about the consumer concerns, just to unpack a couple of numbers. Last Friday, we had the University of Michigan Consumer Sentiment Index falling to 64.7. That's a decline of nearly 10%. You have the inflation outlook, the 5-year inflation outlook at 3.5%, the highest in nearly 30 years. And you have existing home sales falling more than expected last month. So it does look like we have quite a bit of spate of bad news or data to be worried about. How concerned should we be around the consumer picture right now, Howard?
And the consumer is probably one of the most important components here. Their spending is what makes the market go up. We buy stocks because we want the earnings to go higher and them to be worth more. The consumer is the backbone here. If they get nervous, they will pull back on here. That's why all the concern around the tariffs and the potential inflation is starting to go. Business profits need to be maintained. We are at a very close to a 26 PE on 2026 earnings. We are paying a lot for expected growth at this point. If it doesn't materialize, we're going to have to adjust those PEs, which means the price is going to have to come down. So the consumer is key at this point. What's going to also impact it, obviously, is the tariffs, which are still in motion. Wall Street's looking at that, but there's still negotiations in there, so we don't know where they're going to end up. We know the aluminum and the steel is set at 25% right now, an additional 10% to China, but we do not know what's going to happen with Mexico and Canada, which impacts the autos greatly. So the consumer is watching this, and the street is watching, but we need to get a secure base and clear up some of the uncertainty. Uncertainty is difficult for corporations.
Yeah, to that point, how much are you seeing this concern play out in the earnings? For example, retail giant Walmart, how much have they been guiding for lower numbers?
Yeah, Walmart's probably a good example of that. Their earnings were good, their sales were good, their margin was decent, but their expected growth into 2025 was not as high as the street had hoped for. And we saw that pullback right at the beginning on them. So the consumer is everything. Most of the earnings have been holding up for estimates, but very few of the companies have any numbers associated with tariffs costs built in there. Walmart was the first to really discuss that. The consumer spending because of inflation, as well as the potential tariff. And a good deal of Walmart's merchandise is domestic, so they're not even impacted as much as the small, let's say, things like dollar stores or Target that take a lot more from abroad. And it did shake the market. So there's a concern. Again, this needs to play out. We do not know where the tariffs are going. There's going to be some. There's a few in place already. We don't know how the negotiations end and how much is going to be real. And that could impact the consumer greatly. And if the consumer stops spending, we're going to see it quickly. You'll see a quick reaction by the market.
Yeah, it does sound like there's more to be priced in when it comes to these tariff concerns. And of course, you mentioned the retail side. I suppose the automobile side is going to be another big place to watch out for the impact on these of these tariffs.
Yeah, the auto's one that's already talking because the 25% on steel and aluminum is in place. So that's part of it. And the other part is the component parts that the autos get from Mexico and Canada. Ford has been very vocal on this, as is most of them, but Ford very vocal. And they're just saying they cannot pass along that kind of money cost to the consumer, that it just won't hold up on the sell side. In other words, the buying on the consumer, and they don't have the money to absorb all that. So we have to see what deals may be worked out, what the negotiations on the Trump 1.0 there was, which there were tariffs for those items. There were some exemptions for the autos on there with Canada and Mexico, whether one could be built up. But again, if companies cannot plan ahead because they don't know what the circumstances are going to be, give a company the worst scenario, they'll find a way around it. But there's just too many branches on this tree. So until such time as we get some answers and the tariffs, we actually know what they are and what they're not, we may be stuck in this trading range here where we're going, which to some degree is good that we're not testing lower levels, in the mid 55, 5,700 level. We've held that at 59 the other day, so that's a good support level.
Yeah, talking about levels and the concerns that are being priced into the market, the Dow is price-weighted while the S&P 500 is market-weighted. So is there going to be a difference in terms of impact being felt from some of these concerns, earnings-wise, and all the market movements?
Oh, totally. Over time, and we go back, obviously, into the 1928, the Dow and the S&P correlate pretty well, but they get out of whack very often short term. And Walmart, which we discussed, the key example, it didn't impact the S&P on Friday when it opened up so low, $63 down, but it's weighted heavily in the price weighting of the Dow. It's a $500 stock. So when it opened up $63 down, it took the Dow Jones down 385 points. One issue took it down 385 points. Without that, the Dow would have been on the positive side. So investors really need to know the weightings, the differences. The S&P is market weighted. So Apple, Microsoft, NVIDIA, those are the important ones that move it. But on a price weighting, and the Dow is an example, United Health, Walmart, these issues are important. Goldman Sachs is the heaviest one in the Dow. So again, different indices, different impacts. Investors need to know what the difference is. That way they can play them.
Yeah, lots of moving parts to watch out for as we look forward to more news that could move the markets. And helping us out to navigate what's to come, we've got Howard Silverblatt. He is the Senior Index Analyst for Product Management at S&P Dow Jones Indices. Howard, it's been great chatting with you. Thanks for your time and insights.
Thank you. Have a good day.
Catch up with you again soon, Howard. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.